So when you say protecting credit for someone, what do you mean exactly?
Yeah, and it's very important. I guess, asked that question a lot by clients. What do you mean by protecting credit? And a lot of clients aren't aware, but if they do their own shopping for a mortgage and they hop from one financial institution to another, each bank or lender is going to require a credit check from the client. And so if you only do that once or twice, that's okay. But if you do it like 5 or 10 times over and you're shopping around from one institution to another, that impacts your score, because every time a lender checks your credit, it impacts your score by a few points. And if you do that 10 times over, it can have a huge impact on your score. By going to a mortgage broker, we only have to check credit once, and we can provide that credit report to multiple lenders. And so that's what we mean by protecting a client's credit. We only have to check their credit once.
So let's say you check 5 or 10 times and then you stop for 2 years. Does your score creep back up to?
It will. It does eventually creep back up over time. On a credit bureau, when we pull someone's credit bureau, it shows the number of inquiries over the last 1 to 2 years, and we can always see if a client has been shopping around for credit, and it doesn't really look good on the client, and when they're trying to borrow, especially when they're trying to borrow for a home.